the central bank looked at the landscape and realized that a lot of people are not included in banking. Most people didn't have access to bank accounts. They were too far away from any bank branch. They kept their money in their house, whatever money they have, and then they launched this initiative. And one of the first things that came out of that initiative was the establishment of automated settlements. Now, the NIBS, that is Nigerian Interbank Settlement Scheme, was actually founded, I believe, in 1998-99. And the NIBS is owned by the banks. And the first assignment for NIBS was to automate check clearing. For some people on this call, I'm sure you can't imagine what it's like for me to say, I'm in GT Bank, you are in Zenith, I will write you a check and you are not going to get value for the next 1 week. Or if you happen to be in another state, let's say you are in Onitsha and I'm in Lagos, you are not going to get value until around the end of May if I write you a check today. This was Nigerian banking pre-1998, and basically that is how the industry operated. And NIBS was the first to introduce automated check clearing. So all the whole idea of taking physical checks to a clearinghouse went away, and checks could now be cleared centrally in Lagos, as opposed to up-country checks waiting for somebody to physically bring them to the clearinghouse before someone gets value. And of course, part of what happened in the 2000s was the company we now know as InterSwitch, which was a consortium between Accenture, First Bank, initially ValueCard, and a couple of other banks, and a technology company known as Telnet, the Telnet Group. They came together and created InterSwitch. And the objective, or I would say InterSwitch, is the actual first independent fintech company in Nigeria. Not exactly independent, but independent. So it wasn't really run by a consortium like ValueCard, which was its predecessor, but it was run by independent investors. So First Bank was an independent entity, Accenture was a consulting firm, Telnet was a technology company, and so on and so forth. So they actually, their own mission was to introduce the first switch. And what a switch is meant to do was to allow for real-time exchange of transactions between financial institutions. So up until that point, it hadn't happened before in Nigeria. Typically, when you use your card anywhere in the world, or on an ATM, or on a point of sale terminal, that transaction is processed it goes to a processor, which actually it basically tells the transaction where to go. So it identifies that this card is issued by this bank, and the terminal where the payment is being collected belongs to that financial institution. So this is where money must go, and this is how it must go, and this is when it must go. That is what switching is all about. So InterSwitch was the first entity in Nigeria to actually bring this to market and introduce their debit card, which later became Verve. And one other thing, independently but also very profound, that actually set the stage for the next decade was the GSM companies introducing mobile data. So in the 2000s, we're talking about internet banking. Then between 2007 and 2010, the GSM operators started to launch what we know as 3G, third generation mobile internet. Before 3G, there was internet called 2G, but it was limited in availability and it was not reliable enough to perform financial transactions. But with 3G, all of a sudden, we could do financial transactions on our mobile phone. And that set the stage for the 2010s when the banks introduced mobile banking. That is, you can now, because with the 3G, that then came in smartphones that could run apps, just like computers could run applications. And basically banks started building applications instead of the internet banking. They started to build applications that bank customers could now use. Then combining that with the switching capabilities of InterSwitch and later NIBS, it was a how will I put it? It was a leveler in the market. It basically now flattened the landscape. The landscape became flat. So I can now, in the 2010s, I could now pick up my phone and send money from my account in GT to Deji's account in the UBA, and he gets the money instantly. So we had the NIBS instant payment service, quite a number of other services coming in the 2010s. And that became the beginning of the what I'll call the love-hate relationship between banks and telcos. Now in Nigeria, banks and telcos are partners in progress in this fintech journey. Both of them provide critical infrastructure that makes fintech possible, but they don't always see eye to eye. In fact, they see themselves as competitors. But what fintechs have done is to figure out how to work with both. And both of them, thankfully, the government has also enabled them to work together, rather than them being in competition. Now, it was also at that time that, starting with MasterCard and Visa, before then, we didn't have MasterCard in the market here in Nigeria. We didn't have Visa in the market. We had local cards. We had InterSwitch, which later became Verve. Then we had some independent cards. But MasterCard and Visa came directly into the market and started to work with banks. And the CBN also started the process of licensing non-bank financial service providers, which today we call PSPs, payment service providers. So whether you are providing a payment terminal, or you are providing a payment solution, or you are a super agent for retail, or you are a switch, or you are a transaction acquirer, or whatever license, the whole licensing regime started. And we now started to see a different type of startups, which at that time, I wouldn't call them fintechs yet, because their services were primarily targeting financial institutions. So you had new switches that were coming up. You had new payment terminal service providers coming up, but their services were not facing the consumer. So that's the difference between them and fintechs. They actually focused on providing service to licensed financial institutions, providing them with terminals, providing them with switching, providing them with other payment services. And basically what happened during the 2010s was the stage was now finally set for what we call fintech. And what the fintech is, especially everywhere in the world, is I come and build an application that directly speaks to a financial service problem in the market. And I'll talk a bit more about that also in a few minutes. But essentially, in the 2020s, which is where we are, we have now seen a totally different paradigm. Like I mentioned a few minutes ago, what it took a first bank about 100+ years to achieve was achieved in just a few years by the likes of OPay and MoneyPoint in the same market. So that before it, if they had come into the market probably 10 years before or 20 years before, it wouldn't have been possible. But they came and built their services on the foundations that were laid from the 1990s through to the 2010s. So that's basically the story of fintech. Where we are now currently is what we call, in internet jargon, what we call Web3, which I'm sure for those who are, online, conversant with online jargon, you probably have them filtering in. Almost everybody on this call probably has said about cryptocurrency, blockchain, decentralized finance, metaverse, artificial intelligence, and so on and so on. Those are now what we call Web3. So that's the third web, which is the intelligent web. So basically that is actually another wave that is still unfolding in a place like Nigeria. It hasn't unfolded yet, but generally it's a new and exciting time. So basically that's the timeline. So let's talk a bit more about, what the fintech value tiers in Nigeria. So after all said and done, over the last 30 years, we now have, three categories of fintech. Before I actually go into this, from this slide till the end of my presentation, I will no longer talk about traditional banks, except if I refer to them, because fintechs, where we are today in the landscape, I can assure you that we now have independent entities that have redrawn the map of the landscape and redrawn where the value is, such that an average person, myself, yourself, anybody, you actually can perform financial services end-to-end in Nigeria without working with any of the traditional banks. You can remove your money from all the traditional banks and only bank with fintechs. That is how advanced the market has actually become. So now, the value tiers, what I mean by value tiers is that the fintechs fall largely into three categories in Nigeria. And it is, number one is banking, the second is payment processing, and the third is retail channel enabling. So for the banks, they are going after traditional banks. Well, we call them neobanks. So these are banks that don't have branches, they don't have account officer, they don't have address. I mean, they have address, but they might as well not have address. They have everything. The only interface you have with them is your phone, your device, and an app that they provide. And through that app, you can access every single financial service that they offer, the same one that you get from your regular bank. So whether you want to save money, you want to withdraw money, you want to transfer money, you want to make payments, you want to invest money, whatever it is that you do with your bank, they can do it for you. And most of them have what you call, they solve for two things. Number one is cost. So they make it cheaper for you to do those things that you were doing with your banks. So sometimes, if you want to get a loan, how easy is it nowadays to get a loan from your bank? You probably have to call your account officer and so on and so forth, go through some documentation, they do a spreadsheet for you as a business owner, and it takes you quite a bit of time to actually turn around the documentation. However, you have neobanks like Page, Rem Money, who can give you a loan of up to 5 million naira in 2 days and everything you apply on your phone. So they take away the friction of process, because if you went to apply for that same 5 million naira in First Bank, it will move from the account officer to their own team lead. From the team lead, somebody in the bank will do due diligence. Then it will go to what they call the credit committee, and then it finally ends up on the table of one group head who will sign it off. So basically, in fact, a friend of mine told me recently, because I was actually looking to get a loan from a bank, for my business. And a friend told me that, banks don't chase people that want to borrow money. They only chase deposits. Like if you want to put money in the bank, then the account officer will be on your case. But if you want to borrow money from the bank, you will be the one doing the chasing. So I found that very interesting. And what I thought to myself was, these are actually the frictions that fintechs are solving. The fact that you can actually apply from a loan and they're actually competing to offer you the credit as long as you meet some minimum criteria is quite interesting compared to traditional banks they put so many roadblocks on the way, justifiably so, of course, because they have their risk management and the rest of it. But of course, there's a loss of business to them that they are now beginning to realize and re-engineer their business to support. So that's the neobanks. Now, the next category are the payment processors. Those people who stand in the gap, to use a Christian terminology, they stand in the gap between customers and between businesses. So if I'm a business, I want to collect payment from customers, they provide me with the ability to collect payment from customers any way that is convenient for me, without me having to invest in anything. All I need to do is onboard myself on their solution, and I can receive payments, I can make payments, and so on and so forth. So many of them, InterSwitch is actually the pioneer in this space. And you have a few that are quite popular, like Flutterwave, Paystack, and quite a number of them who are, they came up in the last few years and are giving InterSwitch a good run for their money. In the case of neobanks, you have the likes of Kuda, you have Fair Money. Kuda is more or less a bank. They provide banking services, free transfers. They basically actually give you a lot of incentives for you to bank with them at a lower cost. You have the likes of PiggyVest. Their core domain is savings and investments. Likewise, Bamboo is focused on investment. OPay is more or less a competitor with Kuda, as it were. They also provide banking services, retail banking and payment services. Then I've also talked about the payment processors. All they do is enabling multiple dimensions of payment processing. So we all remember that up until a couple of years ago, we could use our cards, our Naira cards, to make payments abroad. We could use them on ATMs abroad. We could use them on POS terminals abroad. Unfortunately, when the currency crisis hit, this became a problem. The cards basically became Naira cards in the real sense of it. They could only work in Nigeria, and they could only work on the Naira. And because of that, it has actually cut a lot of us off services that we normally used to access. So, for example, if you pay for your Netflix or Amazon or any of those subscriptions, it became a challenge. In the old days, we could pay with our Naira card because they are small payments. 4,000 Naira, 3,000 Naira, 2,000 Naira converted to the USD. So now there are, the likes of Flutterwave, other startups like Payday, they are bridging the gap. They allow you to be able to make payments to foreign merchants and also allow foreign customers to make payments to merchants in Nigeria without physically going through the banking value chain, which is passed through, a network they call SWIFT, involving a number of third-party processors before the money can get to Nigeria. In Nigeria, you cannot send out Western Union, for example. I cannot wire money abroad. But with some of these fintechs, I can now make payments abroad, whether it's for school fees, whether it's for medical fees, and so on and so forth, I can make payments. And basically, they work for either traditional institutions or the neobanks, as it were. Then last but not the least, we have the retail channel enablers. So what these guys do is they provide retail agency services. So in the retail ecosystem, Nigeria's retail ecosystem is massive. I have a statistic from Euromonitor. It's not on this slide, that we have close to 40 million Nigerians involved in physical retail. So across the length and breadth of Nigeria, there are more than 40 million people with one store or the other selling. These people need to collect payments. They need to provide services in their community. So these guys like MoneyPoint, Bankly, even my company UCARD is involved in this. We provide FinTech services for the retail channel. And the target is for people who don't have smartphones, who don't have, internet banking, or they don't have apps, they don't live in the city. Maybe they don't even have internet, but they need to go to an outlet. So basically that is what they do. So those are more or less the value tiers for fintechs. Now, let's talk about how fintechs set up for the market. What makes a fintech different from the regular financial service organization? The first thing is that the fintechs are technology-led. So to run a fintech or to start a fintech, the core DNA of the business is technology. Whatever it is that is the mission of that business, it must be accomplished with technology. That is actually the tech in fintech. So it is not marketing led or business led or product led. It's actually technology led, because fintech, the promise of fintech is to provide you exponential value, as in it's supposed to solve friction for you as a customer. Beyond, you don't want to talk to anyone, you want things done instantly, and you want to get value immediately. So that can only be done with technology. So that's the first thing about the fintech. It must be technology led. And they follow the model of high growth startups, which is more or less what we also call the Silicon Valley model. So it's different from most other business models. The Silicon Valley model is really creating technology that solves an important problem in the society, in the economy. It could be a social problem, it could be any type of problem. So, I mean, outside fintech, I'm sure we all have heard of Elon Musk and the kind of startups that he has put in place over the last 20 years. So one of them, for example, is Tesla. So Tesla is a technology company that solves the problem of looking for fuel. I mean, like fuel-driven vehicles, automotive vehicles, that all our vehicles use petrol. They use fossil fuels. And the planet is threatened by climate change because of our excessive use of fossil fuels. Now, Elon is, how do I put it now? Elon is solving the problem by providing a different technology, which is more or less electric car technology, so that the vehicle doesn't rely on fossil fuels. And basically that is really the same model that fintechs follow. So you use technology to solve a problem at a very, that is intended to scale sometimes globally. So your model must be able to, your model for the fintech, if it works in Nigeria, it must work in Ghana, it must work in the USA, it must work in India, it must actually scale beyond geographies, because it relies on technologies, it relies on globally available technologies like the internet, and then it solves cross-border problems. So generally that is how fintechs are typically wired. And then they do a lean mode of operation. So you can't see a fintech opening bank branches, rolling out ATMs, or hiring a lot of people. So fintech or the neobanks I spoke about a few slides back, they don't have account managers. You are your own account manager. They give you the tools to manage your account. So for them internally, it's a knowledge intensive organization. So they invest a lot in knowing about the customer and providing the customer what they need. And of course, like I said, they are designed to solve problems at scale with minimal or zero friction. So problems that they don't solve problems for 1,000 people or 100 people. They solve problems for millions. That is why you could see a situation where a bank, a traditional bank, needed 100 years to turn over ₦1 trillion monthly, while a fintech startup is able to achieve the same numbers within a few years. So they are built that way to scale very fast and to, achieve high impact in a short time. Now let's talk about what I would call buyer personas. Who are the people that are interested in fintech services? So let me put this in a very delicate way. It's actually primarily the objective of the fintech is to provide inclusion. So you might be happy with your bank and your account manager and the way they operate, but most likely most people are not. That's why we have so many unbanked people. So fintechs actually target those people. And ultimately for you that are banked, you will begin to see other people doing what maybe you need to talk to people and it takes you days to do. They do it in minutes. And before you know it, you are beginning to enjoy some of those fintech services. So, and they are also designed more for youthful and aspirational market segments. And when I say youthful, so we all know that our median age in Nigeria is 19. So we have a lot more young people than any other, demographic in Nigeria. We've got a lot more young people. So the services, they are more of technology adopters. It's very easy for them. I would say, I think last night I spent probably all of 2 hours with my mother who's in her 80s, installing a bank app and taking her through it, showing her how it works. So it was actually, she's not an illiterate, but generally because of her generation, she's not used to that. She's used to more of the human touch. I call my account officer, I go to the bank to perform transactions. So I was showing her how to do it. So those fintechs typically start by targeting those people that it will take them, they can learn on their own. They don't need anybody to walk them through the service. So the younger people already have that attribute. And of course, because one of the major things that fintechs solve is cost, they are always looking to give as much value as possible to the customer. So they are more or less, so basically they compete always on price. So a fintech service is almost always cheaper than your bank service. And then of course, the market promise, I would say, is to enable anybody to perform any type of financial transaction without any institutional restriction. Of course, not, you shouldn't be able to do illegal transactions. If something is illegal, it's illegal, right? Within regulatory constraints, they all operate within regulatory constraints. But however, simple everyday things that you need to do to make your life easier, the objective of fintechs is to solve that problem for you. Now, what are the growth opportunities for fintechs in Nigeria? So basically, I mentioned earlier that one of the key success factors, one of the key developments that are driving the growth of fintechs in Nigeria is actually mobile internet. With the increase in access to internet for Nigerians via GSM mobile networks, it now presents an opportunity for fintechs to address the market with services that can run on those networks. So, for example, I believe up until 2015, there were still less than 200,000 POS terminals in Nigeria. Now there's more than 5 times that in Nigeria. And in those days, because in my previous job, I used to provide connectivity. When I was at Etisalat, I provided connectivity to POS terminals for NIBs. And it was kind of a ceremony. So we had to create a special tariff plan for them, special type of SIM, special type of service so that it could work. Today, you can pick up any SIM in the market, put in a POS terminal. You don't need to talk to the network operator. And basically, you are doing transactions. So the mobile operators scaling up their service has actually provided an exponential growth to fintech and has actually created a lot more opportunities, for them. As our population is growing, the estimate is that we will get to about 227 million by 2025. And we still have a lot of those people that don't use banking services. Now, we are told that about 130 million, roughly by 2025, will be mobile subscribers, unique mobile subscribers who have access to mobile internet. And about a third of them will still remain unbanked. Probably remain unbanked. So about a third, that is about 33% of the entire population of connected people will still not have access to banking services. So what that tells you is that as a fintech, there's still a lot of market for you to thrive. Because once you understand the rules of scale and how to run a lean operation and leverage technology as your differentiator, you can get to subscribers faster. And there's also one other soft factor that favors Nigeria. We have a huge population, and a lot of our population is intelligent. However, we have a manufacturing deficiency because we have not over the years, or we have either lost the capacity to be able to produce, or we did not build up the value chain to produce in traditional manufacturing. However, the service industry is somewhere where we can excel, and fintech is sitting firmly in the service industry. We can lead Africa here, and we are already leading Africa. Our fintech startups are already leading Africa in terms of providing services in different parts. So we have the likes of Flutterwave already in quite a number of countries. I think about 14 countries now in Africa. This is a Nigerian startup started by Nigerians, funded from all over the world, and basically taking their services across Africa. And there are many like that. So this is an opportunity for us to actually leverage our growth into the 54 countries of Africa, and it's an opportunity because of our population, because of the type of people that we have, intelligent people that can actually drive this industry. So basically, it's an exciting time to get into fintech one way or the other. Now, let's talk about getting into fintech. So this is where the investor conversation starts. So basically, the question is, okay, how do you invest in fintech? So fintech is a little bit different from saying you want to invest in real estate, because basically anybody can invest in real estate. The value chain is it's just out there. I mean, you can get in at the retail end of real estate. In fintech, it's not quite there yet. It will get there, but it's not quite there yet. So there are some aspects of fintech that is already more or less saturated. I call it the red ocean, where there's a lot of competition, there's a lot of high impact players, and basically margins and opportunities becoming slimmer there. And that is what I call the new banking. So I'm sure you can see in the market, there are many people participating in payments, many people participating in savings. In fact, today I was driving and I saw at the back of a BRT bus a payment app that said free transfers to all banks. Now, I think basically they charge nothing. If you want to do transfer to any bank, that's what they are saying, that they will charge you nothing. So basically that's it. I mean, how do you compete with zero? What that tells you is that, people getting into the, how will I put it? People getting into that industry, you might struggle a bit. If there are players who are offering zero, then of course savings, we already have players who are offering all sorts of savings. So, and generally when it comes to savings, there is a glut in terms of instruments that you can invest in that can give return. So probably you will not see a lot of, you will not see a spike in, savings opportunities. So there are already the traditional savings, there's the fintech savings and so on. Likewise, loans, there are loan apps everywhere. So many people virtually everybody is offering loans. Loans are available. You can take a loan. Even the banks now have their own fintech version of loan apps that they offer to their customers. And then, of course, other services that relate more to, excuse me, everyday consumer banking, as well as business banking. Now, I'll move to the green ocean. The green ocean is, if you invest in that, there's still a lot of opportunity. It's a structured and defined market already, but there is still a lot of opportunity because it has not yet hit saturation. It hasn't hit saturation just yet. So I'm just being told that time is out. So I need to wrap up quickly. I'm just going to take, can I ask Mr. Moderator, can I ask for 5 minutes to wrap up?
Yes, sir. Please, you can take 5 minutes to wrap up, sir. Then we'll take questions. I'm sure there will be questions.
Okay.
Yes. So somebody's already asking me about licensing regimes and all of that. So I'm sure there are questions.
Okay, that's great. So I was talking about green oceans, areas where you can invest now in startups that are playing in that space because it's a well-structured market and there's still a lot of opportunity for growth there, like e-commerce, cross-border payments, then the offline agency banking, collections, and enabling digital investments, the likes of Bamboo, RiceVest, and so on and so forth. Those are green oceans. So now what you call the blue ocean is these are niche areas that are actually very profitable. There's a big segment of value. So like I don't want to talk about Bitcoin because everybody knows about Bitcoin, but whether we like it or not, Bitcoin is still serving the kind of turnover that you have in the Bitcoin industry compared to the number of people that are actually participating in it is actually significant. So for people playing in that space, I believe despite all the risks, there's still some niche opportunities there, especially when it comes to the technology. It's not just trading the coin, but the blockchain technology. There's also what we call embedded finance. Embedded finance is more or less for companies, for businesses to be able to actually embed financial services into their own stack. So just imagine if you had your core business application as a Nigerian breweries or a Guinness or a Coca-Cola, and right inside the core business application you have payments. So maybe your distributors can pay you, you can collect, you don't need to do reconciliation with your bank. You can do everything, yourself. You don't need any third party. Those are also some good niche areas that you can invest in. Now, how do you invest? Generally speaking, I would say fintech is kind of there is no quick and dirty way to invest in fintech. So I'll start from if you don't have any experience investing, you have to join what you call groups of angel investors or invest in angel funds with a proven portfolio and traction. So there are funds that were early investors in the likes of Flutterwave or Paystack and the rest of them. I listed a few of them here. So most of them actually have small size tickets. So if you have, in some cases, maybe 50,000 naira to invest, you can put it in their fund. They put the money in startups and basically they help you multiply the money as the startup progresses along the journey. Then you can also do a portfolio investment. So if you have a proper investment vehicle, maybe you're a family office or you have a PE fund, you can actually look for deals. So maybe there's a startup that is doing a funding round, a fundraise, probably a seed or series A, B, C, depending, or even a public round. Maybe the person is doing commercial papers, So, if you look at it, quite a number of companies that are non-traditional are beginning to invest in commercial papers now. So you can actually invest in those notes and basically for good return. Now, at the top end, if you actually want to be a player in the market yourself, that's where we now talk about capital, talk about licensing. I'll say something very quickly about licensing. So typically, fintechs are licensed by the CBN primarily. Then you have some adjacency. In fact, nowadays, most fintechs are licensed by the CBN, by the NCC as well, and probably by the Securities and Exchange Commission. So CBN typically covers banking and payment services. NCC covers mobile, anything that has to do with mobile technology, and SEC covers investments. So if you are offering any kind of investment, you need to register with SEC. So that, unfortunately, we can't cover in this presentation. Now, just to say a quick word about career, people that are looking for career in FinTech. So I think I told someone recently that if I should, apart from so obviously I invest, I'm a founder of a company, of a FinTech company. And I said, if I wasn't the founder of a FinTech company, I would like to work in a FinTech or run a FinTech and run them. And the person was asking me, what's the skill set? What skill set do you think you'll be bringing to the table? Or what kind of professional? Is it doctor? Is it lawyer? Is it engineer? Economist? Accountant? And I thought about it and I told him that from my experience, it doesn't really matter what you studied or even what your prior experience is. There are 4 things, in my opinion, that you need to learn or you need to imbibe, or it has to be a part of you to succeed as a professional in the FinTech industry. Number 1 is it's technology driven, so you have to understand those technologies. You have to understand how they work, what they do, and what value they bring. And if you are a technology professional, you actually have to focus and gain mastery in how they work. And also, the second thing is you have to understand the models. I talked about lean models, Silicon Valley model. You have to understand how high scaling technology companies operate. That's, you have to, I would say there's no university where you go and learn that. I guess maybe some MBA classes are imbibing that, but typically there are courses you can take, there are books you can read, and you can understand. You have to actually understand the mindset. Then, of course, the third one is that for those people that are used to bureaucracy, FinTech is not for you. In FinTechs, we simplify execution. There must always be a simple way to do things. Bureaucracy in the traditional companies means I have to talk to a lot of people, I have to call a meeting, I have to set up some kind of project structure and go follow some protocols to get anything done. In FinTechs, we solve problems every day. And that's how we actually make customers happy. And then you must be able to work with lean resources. So you must make, biblically speaking, when they say 1 shall chase 1,000 and 2 shall chase 10,000, they were talking about FinTech. So 2 must chase 10,000 in FinTech, not 2,000. So it's very important. And then more importantly, you must have a creative mindset. Regardless of where you are working, which area, you must think outside the box always. You must always think outside the box. So I think I can call it a day here with a quote from Richard Branson. We started from the Bible, we are ending from Branson. Business opportunities are like buses. There's always another one coming. So FinTech is not over, it's just beginning. And the more you learn about it, the more you find out about it, the more excited you'll be to get on. And I think with that, I can call it a day. Thank you very much for the opportunity. And, I hope you've enjoyed it.
Mr. Michael Adeleye says, looking at the vulnerability of the FinTech industry around the world, especially in Nigeria, how can the regulatory bodies curb the scam being perpetuated by scammers, making use of FinTech to defraud people with no trace? Then Marian Abatai says, please, for those who are interested in going into FinTech, what's the starting point and how do we go about it? Mr. Adepo says, how can insurance companies benefit from the FinTech solutions? So that's speaking to InsurTech. Then Mr. Mike Oshukoya says, God bless the guest speaker. I do not understand what he said about paying for small online purchases abroad on Alibaba, Amazon, etc., using our Naira, Visa, or MasterCards. These cards are no longer permitted by the CBN for online payments. So I think it's asking about virtual cards and just other channels. And then Mr. Omojola Awosusi says, thank you so much, Jide, for the great presentation. I'm happy that you're a product of UNAD, or where I was registered for 10 years. I listened to you from Advocate tonight. I really have bundles of questions. Can I have your email? Thank you, sir. We'll share the email on the chat box, sir. Mr. Michael Adeleye, the problem of fraud. Okay, I think we've spoken to this. Okay, Mr. Okay, you're already speaking to that question. Okay. Okay, thanks for sharing your email. Mr. Benjamin Udiogaraya has a question. He says, great and insightful. Looking at the fintech activities in the past 5 years and the proliferation of fintech companies, would you say the industry is being saturated? I would looking at the position of the resolution speaks to that already. How do you see the current global strides in artificial intelligence influencing fintech in Nigeria in the coming years? Okay, that's a deep one. Okay. All right, I think I'll hand it back to you, sir. Okay, I see you're already responding, but maybe to also
Okay.
to speak to some of these things. Thank you, sir.
Okay, so I tried to, in the interest of time, I was trying to make some comments already, but I think I can just speak to them just very quickly. So starting from the question from Mr. Adele with regards fraud. So generally, fraud cuts across, not just fintechs, even traditional banks. So fraud is a problem in the industry. Since we went online, went digital, then we created the opening for bad actors to come in and, gain access to the systems. So right now, there are quite a number of task forces. Remember that fintech is a regulated industry. So you have the CBN, you have the SEC, you have the NCC as well, actively working. I personally am a member of quite a number of action task forces. We work with the police and the EFCC, and the industry is coming up with a comprehensive response. Now, part of why you have a lot of fraud is really because it's like we all went online within a very short time, and you have a lot of new players coming in that, one way or the other, they are putting out new solutions and services that traditional banks decline to do because of the risk factor. So risk is something that every business learns. So one of the things about fintech that I didn't actually address in my presentation is that there is a risk part of it. And when I say risk, I mean there's a risk component in the business that you need to address as a fintech. So you must understand risk and you must have a solution for it. Just like you are using technology to solve business problems, you must also use technology to solve risk. So, if you want to talk about fraud, that's a whole different presentation, a whole different meetings. But what I can tell you is that there are quite a number of initiatives that are addressing issues around fraud. And I know that the industry is very awake to it. All the institutions are awake to it. Now, the next question had to do with online purchases, I believe. Online purchases.
Yes, online purchases, considering that platform work.
Yes, I was talking about the fact that the traditional banks prevented us from using our Naira, MasterCard, and Visa because they couldn't fund the dollar requirement. So, when you go on Amazon or you go on all those sites to buy something, your bank has to provide the dollars to Amazon. And when we had the dollar crisis, the banks couldn't do this anymore. So they didn't allow those purchases to Nigerian cards. And also, generally dollar scarcity, because the traditional banking solution is, I'll go and get a dollar card and then I'll go and get dollars and fund it before I can make a purchase. So that's already what we are talking about, friction. What some startups like Payday and even Flutterwave, and quite a number of them do now, is that they actually abstract that requirement for you. They take your Naira and they provision a virtual dollar card for you that you use to do your purchase, right? Use it to do your purchase, and you don't have to worry about getting dollars. So they take care of all of that for you. So that's regarding the dollar item. Next question from fintech or no fintech, all banks must be licensed by the CBN. All financial institutions must be licensed by the CBN, and there is deposit insurance from the NDIC. So you have to make sure that the entity you are dealing with is licensed by the CBN. So it now falls under regulatory supervision. That being said, I would say that Generally speaking, your funds, at least your funds are safe. However, it does not. So generally, I mean, when you're talking about transactions you are doing, you must also do your own bit of due diligence and make sure that you don't keep funds in an institution that you have not done your own checks on. I don't think it's a question of fintech or bank. All institutions are licensed by the CBN, so make sure that they're actually licensed and they are in good standing before you put your money there. I think then we are now talking about career. I think the next question is now about fintech career. So this is an interesting question. In my presentation, I said
I just remember that I didn't call you.
Anybody can work in a fintech, but the first thing to do is to learn about the industry and understand where your skills and your background can be most suited for. So fintech is primarily a technology company. Any fintech is primarily a technology company. So it's a technology domain. And, in technology domain, there are the core technologists, the software engineers, the infrastructure engineers, which actually is a career path all on its own. Then you have the product, marketing, business development. So if let's say you're a marketer, for example, if you want to work in a fintech, it's obvious that the fintech will be doing digital marketing. They won't be doing traditional marketing, the way what we call marketing in the bank, which is account officer, account management. Typically, fintechs won't do that. They'll reach out to customers online. So you have to add those skills to yourself. You have to train yourself for that, either take courses, empower yourself. So it's really a question of you learning about the industry and figuring out where you fit in. It's an open industry, as it were. Then, of course, I think there was a question about providing my email address, and I think I've provided that. And I think that is, and I've also, let me see. Okay, yes, there's a question about, do I think the industry is saturated? Well, no, it's not. It's not saturated. Why I say it's not saturated, for as long as there are people that are not served by any bank or any fintech, as long as there's a market, there's an opportunity for business. As long as there's a market. From what we are seeing, there's still a market. So, for example, I know that we have, there's a projection for, let me say, agency banking, which I know a bit about. Initially, the CBN was projecting for 500,000 agents. We are now at almost 1 million agents. And the CBN is revising the forecast to now 5 million agents to serve the population of 200 million plus. So it means there's another 4 million agents to be acquired. And the largest players in the market don't even have up to 500,000 agents. So that tells you that the market is not saturated. Once you have your strategy, you understand your market, you have your own differentiator, it's all to play for. And then the global strides in AI, so basically that's what I call the blue ocean. So those are new technologies. Depending on which area you are playing as a fintech, you will definitely require those new technologies to improve the way you relate with your customer, the way you provide services to your customer, and so on and so forth. So new technologies are always relevant. You understand? Yes. Okay, the lady saying her question has not been answered. I think I just answered it.
So the question for those who are interested in going into fintech, what's the starting point and how do we go about it? That's the question she put forward, sir.
Yes, so I came at it from the view, I assume that she's talking about career.
No, I think she's talking about starting.
Well, it depends. So that's a very high-level question. Maybe you should send me an email, because are you interested in going into fintech business? Are you interested in going to fintech? Do you want to acquire a fintech service? Do you want to set up your own fintech? So basically, what I would say is that every other thing aside, what exactly is the problem that you are looking to solve, and for which particular market segment. Start from there. Every other thing you can acquire it if you know the answer to that. So if you know that this is the problem I want to solve that requires fintech, that is always the starting point. So I hope that answers it. In a way, even for career, is the same thing. If I want to work in a fintech, where can I add value to a fintech? What's my skill set today? And what is required in a fintech that speaks to that my skill set? That's really how to go about it. So I don't know if that answers it, but I think you can also send me a mail. I'm happy to engage. If you send me a mail, I can drop me a line. I will definitely respond.